Thank you for joining us again on Analyst Hangout right here on iBrand TV. And I've still got the gentlemen in the studio, Ambrose Amodio and Charles Fakroha. Now, so talking the stock market, we were talking about the sacking of the finance minister of the UK and the impact, especially on the UK market.
Actually, it's expected that there will be little kind of shape, but I don't believe that will do much on the economy, because the new prime minister also is put in place to make sure that the economy, physical aspect is in order. But bringing a new finance minister, or also their governor for the Bank of England is also doing well. I believe that when it comes the balance of, but the good news is that they are revising their fiscal policy of tax cut. That will be good for them. But also, I don't believe that that will do much negative on them. Also, you can see that despite the hike in the interest inflation in US, you can see that both the matured market, all of them are looking up this for today. Let's see how they analyze the figure and see how market also react going into the future.
All right, let's bring on Mr. Kasimo Garuba Karafi right now, who joins us virtually. Thank you for joining us, Mr. Karafi.
Thank you.
Good to have you on the show. So we're just looking at the market performance, talking about how the NGX measured by the benchmark Nigeria All Share Index officially fell into correction territory last week.
Well,
I'd just like to get your thoughts on that as we wrap up this segment. Mr. Karafi, can you hear me?
Yes, I can hear you.
I'd like to get your reaction to how the market performed, talking about...
We can see that the index still show negative, and this is unusual, but we're not surprised, because one, the Q3 result is yet to come. This is the second week, which normally we get it from the first week, but to my greatest surprise, we are yet to receive most of the results. And this is one of the issues. But we have no doubt over us. Q3 will prove right and give the confidence of the investors. And being the last quarter of the year, we are expecting by next week to see that the whole share industry started going up. Even today, if you look at it, some of the good stock, especially in the banking sector, started bouncing back. And we believe this is just the beginning. Others will follow the suit.
All right, well, let's delve into the September inflation. Of course, there are expectations now. The annual inflation rate in Nigeria accelerated to 20.52% in August of 2022 from 19.64% in the previous month, above market expectations of 20.25% and remaining at the highest since September 2005. And as the market expects September inflationary figures, we will be getting the thought of the gentleman right here in the studio, as well as Mr. Garuba Karafi, to see how or what the expectations are. Let me start with Charles. What are your expectations of the September inflation figure? Big sigh.
That's a tough one. Well, I always say on this platform that the way the monetary authorities have managed this monetary policy in terms of the rates, I personally am not satisfied, because I don't believe that just keep on increasing the rates will even begin to solve the problem. But again, if you look at it critically, you cannot blame the monetary authorities, that is the CBN and his group. The fiscal side of the economy, there is nothing to write home about it. And one is beginning to wonder, is the NPC people, are they inflation hawk? Why in monetary policy jargon, inflation hawk is policy makers who just continue to increase their interest rate because of inflation rate is increasing. For me, that is not the optimal way of solving a problem. So what we should begin to look at, we need to harmonize both fiscal and monetary so that we'll get the optimal performance from the economy. But again, to answer your question, what are inflation, what are we expecting for?
What's your prediction?
Well, I would say I'm going to look into the crystal ball, but just looking at what is happening now, and of course our perception, some of these macroeconomic variables, this data, they are lagging information. It has already happened, but looking at the perception, what I'm seeing now, looking at what is going on, the government is trying a lot, but with this recent floods all over the place, this is happening in October, but probably by see a reflection of that. So I
September.
see a little slight increase in the inflation rate. That is especially for core inflation, you know, where they will include the food and energy costs. I think that will increase slightly.
Okay, you're not giving us any figures, but let me come to Ambrose. You've been giggling since. It looks like you're not expecting anything lesser.
Like my colleague just said here, you know, when it comes to inflation figure, it does think about the food basket and the energy just mentioned together. But look at the season where we are. Ideally, we are already in harvest season, which we expect that price should, you know, moderate.
Go down.
But because of farmers are not in the farm, as a lot of insecurity, we might not see much of that impact on inflation figure. But for me, I'm expecting that this inflation figure is very, very key to MPC decision. And we're having the last MPC meeting in the month of November, and that will be the last for the year. Their eyes will be on this figure that is coming today to see where we are going from here. But I believe that, you know, as far as the figure for GDP, for inflation is still looking up, we might see inflation interest going up. But when we see a kind of a slowdown in inflation, see a sign that things is slowing down, and also seeing a sign that the unemployment market become you know, weak, and there we can say, okay, and companies also having access to funds become something, you know, terrible, they might see a little adjustment in MPC down. But if inflation figure remain strong as we saw the previous month, they might not do anything, no, rather than.
So you are putting it in a probability. You're saying that it may slow down. Is it possible for it to slow down?
Yeah, that's why I've given this about because of insecurity. Ideally, in harvest period, we start to see excess, you know, products in the market. But now people are farming that are very few. I mean, if demand is still high, even though we're in harvest season, price will still remain up. Or it depends on how, whatever I say. For me, I would say it might hit around the, you know, 21 or 21.2 if possible. But I don't see it going the way it moved for the last 2 months. But it might be a little slow down for me. But this also should inform investors that as you are seeing this inflation, those that are also what we call balancing your portfolio. If you are doing real estate, because a well-balanced portfolio must have real estate in your portfolio, must have a fixed income, have market, equity market. You need to balance and see where you are going. Because fine, if you really want to hedge against inflation, if you are looking the way of the fixed income market, it's good for those that has billions and also trillions. But for you like me that I want to balance up, we look at how can we hedge against inflation through the equity space that we can still make money. It depends on your investment objective, but I believe that inflation will just inch up later, not much as we've seen the past previous months. All
right, Mr. Kasim Garuba-Karfi, let's hear your prediction. What do you expect of the September inflation figure?
I'm not different from my colleagues in view of the inflation, but I believe that if there is any increase, it will be marginal. And then forget that the major component of the inflation is food cost. And we know with the bumper harvest, we are expecting a lot of new product being harvested and coming into the market. If you go to the market, you see new maize, you see new yam, you see so many other stock are coming. So that will downplay the price of the cost of the food. And with that one, that could have been. But however, if you look at it for almost 2 weeks, there is a hinterlock at Lokoja. Movement of the product down to the north is almost standstill, and that causes the cost of the inflation, particularly the energy, the oil, to go much higher, and that stagnated the inflow of the harvest product down to the south. So we see that with this, the inflation is likely going to increase, but we hope that that will be the last for the year. The rest will be the other way around.
Yes, okay, last for the year. I like that.
You know, Ambrose just talked about the fact that if we see an increase, then we might be expecting an increase in the MPR again. What does that portend?
Well, like I've said, I don't think the monetary policy authorities, they're just there to inflation increase. You also
increase the interest rate.
Yes, and that's what we call them hawk, inflation hawk. You know,
joining the bandwagon.
Yes, but I don't think that will be 100% okay. So we should also be looking at other tools that can be used. I'll keep mentioning the fiscal authority. This is the time they need to come in and see. Of course, well, you will say they have come because recently we saw that they are relieving SMEs of paying some excise
the
tax.
10 naira excise.
Exactly. So maybe that will stimulate some of the SMEs. Yes, that will stimulate them and maybe encourage them to be in production. And because once we have production, like he said, if people are able to go to the farm, security is okay, then some of these issues we are seeing here will have been downplayed. So the government should look at the economy holistically and not just looking at, yes, the CBN governor is doing his work, and we can't blame him. The Minister of Finance, of course, she's so busy trying to see how we can do some debt restructuring all over the
which is another kettle of fish, of
but
course.
I just hope that we get it right as soon as possible.
But you know, a lot of people have been talking about using other tools, while some people have said that this is the only tool that the CBN has when it comes to managing inflation. But what other tools do you suppose that they can explore as against always increasing the MPR?
You know, the move they made when we had a recession was another way of managing this kind of situation. You know, by having a special intervention in some critical sector, which is a good one. But you know, anywhere in the world, CBN duty is just to work for price stability and also job creation. These are the things. How do they create job? We need this instrument of interest up and down. And also this also the stabilized price. But the good thing again is that when this thing happens, or ask yourself a question, and that is why I said you must not follow the is it theory or book knowledge alone, because I believe that when I was in secondary school, when you see hacking rate, it's about when you have excess liquidity in that environment, you want to mop out. That is why you have so that this fund will leave the kind of and go back. But now we are not seeing that liquidity and we are increasing rate. But I think it's the time for them to balance it, because this 400 basic point they've done in just less than 6 months for me is huge, and that's why the economy is already feeling the heat, because cost of fund is high and people cannot expand, people cannot do more of their business, because if you borrow, you pay from your nose. As we speak now, even the consumer loan alone is about 29 to 30%. Consumer loan, talk of for me, we have to be very careful. But the good thing is that as we are saying interest, there are people benefiting for the interest. Indeed. I'm telling you. Then also like we talked about the earnings. As we are looking forward to see Q2 number, I told my colleague in the office that as at May 24, 2022, when the first hike was done, that is almost end of second quarter. We didn't see much impact on the banking earnings. Now, for the full 3 months, we have seen they've increased it almost 3 times within the period. I don't see the last one also impacting their performance. But that 14% should, because they've done what we call renegotiation of their loans. And automatically, in banking, you create money by giving loan. If that is what we expect these banks to increase their worth, to improve on their net interest income, and that also be what. Also, if you look at those sectors that CBN have done critical intervention, they say that in next year still remain on single digit worth interest. That means we expect those companies also in that sector to bring out a better number. That's why for investors, I see they say we can sit down and analyze where we expect to see sectors that are going to do. I said
it's predictable.
We have 12 sectors. You should know settle that either policy is favoring them or sentiment in the market is favoring them. These are also those that have real estate back commodity on their health. Look at those sectors that, as we speak now, if you want to hedge against inflation proper, it's real estate that you use.
All right, Ambrose, we have to move on. Let's talk about this new bride that's gradually losing its glory. Talking about Geregu Power PLC, which witnessed investors' negative sentiment first time after listing on the Nigerian exchange group, resulting in the stock recording a loss of 9.02% or 27.2 trillion, or rather 2 billion naira, following sustained bearish market occasioned by the build-up to the 2023 general elections and interest rate hike. And further analysis showed that 1.2 million worth of the shares were traded in 196 deals. In another development, Geregu Power PLC has notified the Nigerian Exchange Limited and the investing public that the company has obtained approval to list the 40.09 billion naira Series 1 fixed-rate senior unsecured bond on the FMDQ Securities Exchange. And according to a notice signed by Akinlaye Olagbinde, Company Secretary, the bond will be added on the FMDQ's daily quotations and listing page on the FMDQ Exchange website, after which the bond will be admitted for trading. Let me start with Mr. Garuba Karafi. It looks like the honeymoon is over for Geregu. Is this the beginning of market pricing?
No, it's not over. If you look at it, this is a stock that came to the market at 100 naira. And today, as I'm talking to you, it's trading at 110. There is still a gain of 10%. Of course, it went as high as 125. It came down. This has to do with what obtained in the market. Generally, the market is down. you hardly get a single stock will that move it to that level. So even the one that have just gained now, they are still lower than the higher within there. So I see it was just affected by what translated in the market that they were affected. But however, when you look at it, it just listed within 2 weeks. You look at the volume traded, it gives the hope for the investors. And we have seen their audited result. We are waiting for their 9 months result, which are expected to come first week next week.
Okay.
No, by next week.
All
And
right.
that may even trigger it to change the whole trend. Because remember, it's a pioneer and the first setter. So we have not seen what is obtained in the other gem code except a mere guesswork. So we believe that still there is hope, and we expect that it can go much higher than. In view of their past performance and their earning per share, that will trigger it to go much higher.
Okay.
So it's not over.
All right, it looks like Mr. Korofi is a bit optimistic about Geregu power plant, but what are your thoughts, especially now that it is declining after a week straight gain?
Well,
You
like
see, what trigger the stock price to go up is the quantity supply.
Okay.
Okay, Mr. Garba, I'll come back to you. I'll come back to you, Mr. Garba. Let me hear Charles' thoughts.
yes, it's like he just took it from me. You know, a stock is listed by way of introduction for the first time. They are not raising any funds. These are already existing shares. And as it is there, new investors want to. So those who had it earlier, of course, as the price is going, they will
Supply.
they want to supply. And of course, the quantity is limited because it is not, there's no new shares being issued. So you have so much demand for it. A lot of people looking for the shares. And what happens? Simple demand and supply ratio. The price will go up. Like I said on this platform, it is initial gra-gra. At the end of the day, the market will price it. It could price it positively because, like my senior colleague said, it is a pioneer, and people have not known what is obtainable in that sector. And of course, we're expecting some of their numbers to come. Power generation is key to any country's industrial development. And if we have seen from what the chairman of that company has done, people believe in him so much. So of course they believe that the company will be well run, and of course it's utility.
Okay.
You nobody need to come and convince you to make use of your
Power.
of power. So the market is there. As long as they're able to generate, of course, Nigerians will consume and will pay. So that sector has a real prospect. But for the pricing of the security itself for now, yes, I think it is too early. Let's watch how it's going to be.
We'll come to that, but let me come to you, Ambrose. You were one of the people who predicted this drop, talking about the fact that it's just enjoying that gain because it's just newly listed. But are you also optimistic that perhaps there would be an increase in the nearest future?
Just like two of my colleagues have said already, you know, when it comes to equity markets, trading is about demand and supply. When you say trading, either you are investing because you are doing about the buy side and the buy side, and the buy and sell side. And also believe that for you in technical analysis, we say buy right and sell right. And fundamental, we say overpriced and underpriced. Then for me, what the market settle is stock for that day, that is what the market value. That is what they value that stock. For me, if the price is going to go down, that means investors are still bringing it down. If they want to appreciate it to go up, all we are saying is that we have seen their number, they are in a new sector, or the fourth to come to that sector. That is not for me. It doesn't make more difference. It is the demand and supply that matters. And for me, if investors are interested in accumulating this stock, the price will bounce back. But if they are ready to just, as they are supplying and they're not ready to buy this price, it will come down. Demand and supply. Because those that owned it before now, if they got in it at 40 naira, as I've said early in the morning, 40 naira, and they sit at 100 naira, I start to say, and it starts supply, it will come down. But if they say we're holding it, we're not supplying, demand will be there, no supply, price will go up. The imbalance between demand and supply is what moves price up or down. And for me, investors should not panic. Like I said in this program again, if you look at the itinerary for demand that is behind it, we know the price is. And also, if you take statistics, look at all the billionaires in Nigeria who say it, where they are, they know how to move their stocks. Move with the billionaires in Nigeria. Not only in Nigeria, in a mature economy, like I see all those big names in US, they hold big stocks. You know, where they are there, you are there because they don't want their value to come down. Don't forget that we're already approaching December, where the rating from Forbes will be flying here and there. And this is part of what they used to rate him. You know, what he has here in in holding and others. For me, I see the price, but let it come down. If it come down below 10, below 100, I think I was jumping. It's a good
All right, we'll watch how that pans out. But let me hear you, Mr. Garuba Karofi, talk to us about these approved 40.09 billion naira unsecured bond listing of the Geregu power plant.
Well, you see, gearing is part of the business. Most of the company go into gearing because if you don't want to dilute your equity, you have to take the loan. And I think that's what Geregu did. If you look at the share capital, just 2.5 billion. And 2.5 billion, if you compare to the others, you say that it's a very low share capital. So what they did, they want to complement it with the fixed income, that is the loan. And that there is nothing wrong with it in view of the fact that they generate power and they get a sole buyer, that is the federal government, who must pay, and therefore they are just cash cow, and they will be able to, whatever they listed, they can do much better because the demand of the power is imminent, and we cannot meet up even 25% of the demand of the power.
Yes,
so
sir.
whatever they can invest to expand their capacity is a welcome development because the market is ready for them.
But don't you think this is a bit early for them to be getting enlisted in this bond, unsecured bond?
No, if you look at it, this bond matters are going on before now. The approval has been given, I think, around July this year.
Okay.
So what they just did now was to make it liquid. That is, to list it in the fixed income
platform
market, a platform, so that those who don't have it before can access that platform and see how they can also buy. And those who had it, they want you make it liquid. So it is now in the secondary market. So it's not that it's just because of now they are coming in. So for me, listing in the FMDQ platform is a welcome development. It's going to make that bond very liquid. And of course, it shows that the management of the Geregu power plant, they are strategic, they know what they are doing, because you can see a mix of equity and debt, which is what my senior colleague spoke about, the gearing. You need to look at that very well. And the funds were used to expand their capacity, which is what we want, because we need to increase that our power generation. We cannot be doing less than, is it 3,000?
It even fell recently to about 2,000 megawatts.
We have the capacity to generate almost about 14,000 megawatts. So if Geregu...
I'm saying that they are a generating company.
Of course, that's what I say, generating. So if they are taking loan, unsecured loan, note, the loan is unsecured.
No collateral.
It is not tied to any of their assets, But funny enough, ratings were done. And it was given, I can't remember the exact rate, but it was, I think, maybe about BB+. So it shows that, yes, the bond itself is a very good one, and a lot of investors, even pension funds, were investing in that bond, high net worth individuals, and of course, now it is now being listed on another platform. So me and you can approach that platform.
We have to take another breather now. When we'll come back, we'll delve into the 2023 budget deficit and other stories. Please stay with us.